Look, China's economy is in a lot of trouble right now. The property market chaos is still ongoing, with declining property prices, bank runs have created unrest throughout the country, and the mortgage boycotts by hundreds of thousands of people just makes them even worse. But what if I tell you that these events are not isolated events that happened because of different reasons, but rather they are a part of a systemic problem that has developed for over a decade? And without solving the underlying problem, China's economy will keep having issues pop up left and right, even if, let's say, the property market fully recovered, which is very unlikely. While I don't think China's economy will collapse like these wonderful thumbnails say, I do think that it's quite a tricky situation, and this problem will take years to solve, with pretty painful consequences. Let me explain why in this video. So, at the heart of China's financial problem is the way China generated economic growth for the past 10 to 15 years. In most countries, businesses use resources to produce goods and services, and people buy those goods and services. The sum of all the finished goods and services produced within the country for a specific time period like a quarter or a year is calculated into a neat little number, which is called GDP. In China, however, the process is backwards. Beijing sets a target GDP at the beginning of a time period, and its economic actors like the local governments and the property sector before it went bust has to deliver that GDP target at all costs. They do this by bridging the gap between the real growth produced by the private sector and the GDP target set by Beijing. So for example, if the GDP growth target is 5% while the real high-quality GDP growth is only 3%, you need to get that extra 2% by any means necessary to satisfy Beijing. It wasn't always like this though. During the 80s and 90s, China was a small economy underinvested in almost every sector. So the investment that it generated can be used productively to generate high-quality beneficial growth like building roads, schools, and factories that all yield a good return on investments. In fact, this is why in the 80s and 90s, China's GDP growth always exceeds its GDP growth targets by a few percentage points. However, this began to change in the 2000s, particularly during the 2008 global financial crisis when productive investment opportunities began drying up. By then, China should have lowered the amount it reinvested into the economy. But to do so without reducing GDP growth requires a transfer of income to the household sector to increase consumption. This is actually way harder than it sounds, and China found itself failing to rebalance its economy because they don't have the necessary political and institutional mechanism to do so. And they began to systematically overinvest in projects that contributed less than what they cost in terms of output. In simple words, if you invest $10,000 in a business that generates $11,000, that's a good 10% return on investment. On the other hand, if you invested $10,000 on a bad project that generates only $9,000, then it's a bad investment and you just lost 10% of your money, meaning that you shouldn't do it in the first place. This example is obviously oversimplified, but it is exactly what China did for the last 10 to 15 years to achieve the GDP growth that the government really badly desire. But when they keep investing in non-productive investments, they must take on ever-increasing amounts of debt to do so sustainably. This is when China's debt rises faster than its debt servicing capacity because it is used to fund non-productive investments. This policy paper, for example, written by 6 World Bank economists, found that China's productive growth has declined rapidly since the global financial crisis. They said that the aggregate total factor productivity or TFP growth declined from 2.8% during the 10 years before the 2008 crisis to a meager 0.7% between 2009 to 2018, significantly lower than the pre-crisis level. Furthermore, they said that the allocation of a larger share of credit and investments to infrastructure and housing led to lower returns to capital, a rapid build-up in debt, and higher risks to growth. Now, the rise in debt mostly occurs in the balance sheet of Chinese banks and the real estate sector, and it means that China's financial system is underpinned by a serious moral hazard. This is because the rise in the value of debt is matched by the rise in the book value of assets, because assets equal liabilities. That's just how accounting works. The problem is that when banks and the property sector took on these non-productive investments, The real economic value of those assets turned out to be far less than the book value, so what looks like a healthy balance sheet turned out to be embedded in hidden losses. Banks and property developers accepted this as long as the Chinese government covers up their losses, and in turn they help Beijing to achieve the excessive GDP growth targets. A good example of this is Evergrande. Last year, when Evergrande failed to meet its gigantic debt obligation of $300 billion, it will sell its assets to help finance those payments. However, upon closer inspection, a lot of those assets were failed projects like abandoned hotels or low-value assets like parking spaces that were still written as fully functional investment properties. The Hong Kong accounting firm GMT Research found that in 2016, 150 billion RMB or $21 billion of Evergrande's assets should be written down, 3 times its shareholder equity. Now, another major problem in China's economy is its excessive risk-taking behavior. In a well-functioning capitalist economy, firms that take too little risk will usually underperform and fail, while firms that take too much risk will perform well at first but will get into trouble when an economic downturn eventually happens. This is how, in theory, a well-functioning efficient market weeds out bad-performing firms and rewards the good ones. In China, however, decades of rising asset prices, monetary expansion, and rapid growth have effectively altered how this mechanism works. In such circumstances, firms that take too much risk will continue to thrive because they will always outperform firms that took the conservative approach. For example, land auctions in China have been known for their extremely high prices. It is not uncommon to see a plot of land to be sold at 50% to 100% above the asking price, especially in good locations. Property developers that took on too much debt will be more equipped to buy expensive land at good locations and outbid the more conservative developers. This is a huge problem because when the economic environment rewards excessive risk-taking, naturally most firms will be incentivized to do just that. And the more careful firms that should be successful in normal environments are driven out. With the assumption that property prices will keep rising, developers will keep buying property at a faster rate than they could develop them, which is the same as speculating on land prices. So, the most successful businesses are not those that sell superior products or market their products well, but the ones that were most aggressive in speculating on real estate will be successful. These speculative profits then show up in the numbers as growth, even though it actually isn't. The same exact thing happens with banks and financial institutions. Those who lend more aggressively to property developers will see their assets increase quickly and become more profitable, while conservative banks are driven out of the market. As property prices kept increasing, banks became more willing to lend aggressively against collateral in an attempt to grow even faster. Households and ordinary people are also affected by this. As real estate prices kept going up, it created a wealth effect that made people feel richer, especially because 75% of household wealth is in real estate. And when people feel richer, they became more inclined to spend more money than they would have, since it can be covered with rising real estate prices. This led to more overvalued asset prices and rapid growth in the economy. Unfortunately, although these kinds of wealth effects may take years to develop, for China it's around 15 years, it only took one wrong step to essentially pop the bubble and the wealth effects work in the other direction, only this time much more brutally. As asset prices decline and people begin to feel poorer, consumers may cut back on spending, home buyers may delay purchases, businesses may become risk-averse and halt their investments, and factories may postpone production, with one event supporting the other. The case of China is very concerning because this excessive risk-taking is happening with households, businesses, and banks all at the same time. The forms of risk-taking are also highly correlated across multiple sectors, which is an economy-wide systemic problem. Households keep taking on debt to buy investment properties, developers keep taking on debt to keep buying more land, and banks keep funding both households and developers with mortgages and loans. Of course, all of this could be sustainable as long as real estate prices keep rising, but no good thing lasts forever, I guess. So, problems started to surface because of a liquidity shock. Because households, businesses, and banks are spending and investing excessively, The liquidity of the whole economy drains and the system became much more riskier. When a liquidity shock eventually occurs, households, businesses, and financial institutions rush to convert their risky assets into cash, and the price of these risky assets fall. This will keep expanding in a downward spiral until the central bank bails them out one way or another. Now, when problems begin to occur, usually people will blame the direct cause of it. For example, the property meltdown is caused by the 3 red lines policy that sucked the life out of property developers. The bank run in Henan province is caused by fraud and a criminal gang that took over banks, and the mortgage boycott is caused by impatient homebuyers that became angry. But they failed to see the underlying problem, which is the extreme risk-taking behavior taken by households, businesses, and financial institutions caused by decades of rising real estate prices, expansionary monetary policy, and high investment in non-productive assets. The 3 red lines policy, the bank fraud, and angry homebuyers are the trigger, not the underlying cause. So, what did the Chinese government actually do to tackle this systemic problem? Well, first of all, they have been trying hard to resume all stalled property projects, likely a response to the mortgage boycotts that threatened to damage the banking system. Local governments have been tasked to provide bailout funds for cash-starved property developers and also took on projects and delivered these homes themselves. The government also took steps to make the banking system more resilient, like allowing revenue generated from special local bonds to recapitalize small and medium-sized banks. Local governments have provided incentives to prop up the property market again, like lowering down payments for a home. A city named Jiangsu with a population of 500,000 people is offering $150 to any property broker that can make a sale. Developers have also started accepting house payments with watermelon, wheat, and garlic to boost demand for housing amongst farmers. And there are lots of moves here with more intervention coming in the next month or two. And this indicates that China knows the problem is systemic. So, will this all work? Well, unfortunately, while China is doing lots of things to contain the crisis, a lot of it is just transferring the problem away from property developers to local governments and from small banks to big banks. To be clear, this will have at least some effect. It can help to prevent or limit financial contagion and banking panics, but they do not solve the underlying problem, which are the overly excessive GDP growth targets and the non-productive investments made to achieve that GDP. Now, one major part of the Chinese economic problem is the banking crisis. If you want to know how that works and its systemic risks, feel free to check this video out. This is Doverhill, and see you next time.